This extra rate, it's called overtime premium. Alright? So I give you quick examples of the overtime premium and overtime pay. So overtime pay could be like as workers supposed to work until 5 p.m. It's worker work, for example, not 5 p.m. worker work until 8 p.m. Not stop at 5, keep working until 8. So that 3 hours are extra. But company will apply the same rate if this thing happened during the weekdays. Alright? And if worker work on weekends, so that company will pay extra rate will apply. Alright? To work on weekends. So that's called the overtime premium. Alright? So how do we calculate the overtime premium or overtime premium rate? So that rate is basically 1.5 times of regular hours. Right? Regular rate. Regular hours or regular labor rate. Or we can say that 150% of your regular labor rate. 150% of your regular labor rate is called the overtime premium. Alright? Okay, so keep in your mind, overtime pay is your direct labor. Alright? Overtime pay is your direct labor. Why? Because it's maximizing your productivities, directly involved into the production. Workers are efficient. Right? But overtime premium, the rate or overtime premium is not your direct labor. Why? Because the workers are doing the same thing. Productivity hasn't increased. So the worker who supposed to work Monday to Friday, same worker is doing on Saturday, same product, same quantity, worker are producing on Saturday, but the rate is different. So that means company paying more to do the same work that other worker works during the weekdays. Alright. So in that case, overtime premium considered to be your manufacturing overheads. Alright. The extra rates company is paying to the worker that considered to be manufacturing overheads. Right? Let's say $10 is the regular rate. So $10 and 150%, so means 1.5 will be 5. Alright. So overtime premium will be 15. Alright. 15. So the idea is that this $10 is your manufacturing overhead, because it's not maximizing your productivity. Alright. And this $10 is your direct labor cost. Alright. This is your direct labor cost. So that is the ideas behind the overtime pay and overtime premium. Manufacturing. Alright. Okay. So that's all about the overtime. Right? Now we move on to the last point that is not really long, which is the payroll taxes. So just keep in your mind, payroll taxes will transfer to your manufacturing overhead. Right? It will transfer to your manufacturing overhead as it's not a direct labor cost. Alright? So that's all about your learning outcome 3. Alright. So now we move on to the learning outcome 5. As I said, that learning outcome 4 is not part of your syllabus. So learning outcome 5. So learning outcome 5 is special problems related to the labor cost. In this special problem, we will talk about the shift premium first. Right? So shift premium means, in simple language, or I come to a direct example, or the shift premium is when, let's say, when the workers are working at night. All right? Workers are not willing to work at night. They are not willing to take the night shifts because their regular life routines could be affected. Right? So that's why they prefer to work in a day. So, but company has to encourage worker to work at night. So company likely to pay extra. So that's called the shift premium. All right. So we have the first one is the shift premium. All right. So let's say night shift. All right. All right. Night shift. So, as I said, that company, in order to motivate the worker to work at night, company likely to pay them better rather than them working in the day shifts. So the idea is that in that case, your shift premium will transfer to the manufacturing overheads. It's not your direct labor cost. What? The same thing like as we talked in the shift premium, right? Overtime premium. In overtime premium, if the workers are doing the same job, like as other workers are working in the normal period of time, but company has to pay them extra. So company productivity doesn't increase, so that worker is not efficient anymore. All right. So it's not a direct labor. So that's why it's an indirect labor transfer to the manufacturer. Same reason here too. Same conditions apply here too. The workers are working in the night shift. Whatever workers they are working in the day, same products worker producing at night. All right. So same money, but quantity is same quantity, but the money is different. All right. So now we move on to the next one. Next one is the pension. You know that the pension is basically promise to provide income after retirements. Right? So worker retire from the job, right? And company promise to pay money, regular money over the period of time. So that's the minimum income. All right. So that pension, the another name is pension is we call it defined contribution plan. Defined contribution plan means company contribute in worker pension over the period, right? But that contribution depends upon the company performance and the stock price, right? So now here we have two types of contribution plan. First is contributory plan, right? Another one is a non-contributory plan. Contributory plan means worker and company, employee and employer both contribute in that pension account. Alright? Non-contributory is only company contributes, worker does not contribute. So it depends upon the companies to companies, company regulations, and countries' regulations as well. Alright? So in some countries we call it employee provident fund or EPF or something like that, superannuation, something like that. Okay. So that's all about the pension, and of course pension is your manufacturing overheads too. Alright, so that's also your manufacturing overheads. Next one is the bonus, incentives. Alright. Company, in order to motivate worker over the period of time, so company basically give them the bonus. Alright. Bonus also your manufacturing overheads. Alright. And the last special problem is paid vacations and holidays. Right. Paid vacations and holidays. So it means company pay money to workers even though workers are on holidays, or company give them some kinds of fund in order to travel. So that's called the paid vacations. And of course, paid vacations also belongs to your manufacturing overheads. Right? So that's all about your topic 3, which is accounting for labor. So now we wrap up again. So in this topic, we talked about 4 learning outcomes. So the first learning outcome is about the wage plan. How does company pay money to their workers? So we talked about 3 different kinds of wage plan. So the first one is an hour rate plan. Company pay according to per hours. Right? Second one is a piece rate plan. Company pay money according to number of product worker produce. Third one is a modified wage plan, which is the combination of hour rate plan and piece rate plan. Right. And keep in your mind, when we are calculating the modified wage plan, we have to check what is the performance of the worker, efficient or inefficient. Right? If the worker is inefficient, still worker will get the same money like as the worker is efficient. But